Hey guys, welcome to another Trade Genius podcast. Bob and Phil here. As always, guys, the market jumped up big because of the soft inflation data. But is that really the case? We got a chart you're going to want to see. Let's dive in.
Trade Genius.
Hey everybody, it's Bob with Trade Genius. Usually I do fun ads. I talk about our service, but I want to be serious with you for a second. We've been helping a lot of people trading for a long time. As you can see here, I want to let them do the talking for me for a change. But most importantly, we want to help you too. If you've not joined our service yet, come check us out, tradelikeagenius.com. Full service. You know, we have a chat room. We have the algorithms for you. We give trades out every day. We educate you. So go to tradelikeagenius.com. Check us out. What you get out of our service is much, much more than what you put into it. And we'd like to see you in the room. Thanks for listening.
Yeah, Bob, so, I think our scenario for a blow-off move is kind of in progress now, and they're going to use every little news item that they can, I think, to trigger the moves. Today, obviously, they love the CPI print, came in softer than expected, but this chart here that we're going to show everybody, I think, explains why Powell came off as hawkish as he did. What do you think?
Yeah, it was really interesting. I expect him to have a little bit softer tone based on the CPI report, but he's right to be worried. I was reading earlier also, I'll show this chart in a second, that, oil prices are expected to rise substantially going into 25, 26 because we're not producing oil in this country at the same production levels and becoming extremely restrictive under the Biden administration. And we're going to get ourselves a surge in energy costs. But the first chart I want to show you is that history does repeat. You don't beat inflation with one round, okay? These things have kind of a life of their own, almost Elliott wave-ish, if you will. And so we're really coming up on the next round of inflation, and this is the biggest one coming. So now I agree here that it's going to look choppy. The narrative is going to look good. Maybe get them through 2024, Phil, and then going into 2025, I think the panic buttons are going to be ringing because growth is going to continue to fall. At the same time, prices are going to continue to rise, and they're going to use the wrong prescription. Janet Yellen, if it's Trump next year, I guarantee you Trump's not going to stop the water flow of money into the system. He's not going to want to be Hoover part two, when Hoover got caught dealing with a depression that was caused by his predecessor. But there's another chart here I want to show you guys too, is that, and this is the ignition key, if you will, is that the M2, the money supply has turned positive, Phil. Now, this is good, I think, for stocks, because I think you would agree with me is that M2 is really the best predictor of stock price movement. And we've gone green here on it, and we're going to have a lot of cash and a lot of liquidity, and we're going to have this overflow of money velocity and money supply coming in. And I think we're going to get this blow off that we're talking about. And I think you and I disagree a little bit, and maybe we'll explain each other's positions. But I think we both agree on a summer rally. We both agree on a fall chop. And then I'm more worried about what happens after the election because of other issues other than economics. But I think you're looking at maybe another potential move even higher in that. Can you correct me if I'm wrong on that?
Well, I think there's a good chance that we get a market top in August. Now, I think we pull back, and I think we have one more attempt higher from, let's say, late September into the election. And then I also think we get a little bit of a tailwind push post-election as the post-election hedges come off. But that could be like 1 week, and it could drift up 100 points maybe, but it wouldn't be like a sustained rally. And in fact, in my mind, we would then make a lower high. So the high in August holds, we get a lower high, let's say, into the election, and then that's it. That's all she wrote.
Okay, so you and I are in sync. And what's interesting to me is that in 2025, we may have a market that's crashing, but we may have stocks within that market that are going to do really well, like in 1973, 74, and 75, where energy and commodities were ripping because of supply constraints, but the rest of the market's taking it on the chin because they can't make any margin. I think that's kind of I'm still in the camp where it's not going to be just a total absolute disaster. I think it comes after that, just like what happened in 79, 80, and 81, where everything just then pukes after that. This decade is not going to be a fun decade. It's going to be a great decade for traders, I think, Phil, and some of the new tools that are being presented to us by Wall Street. There are actually some really good tools coming out that can really help retail traders. And so if you want want to trade with us, we're explaining these right now in the room, how to use these things. They're not hard. You just need to understand them a little bit. And then also you can apply the algorithms to them, or you can set and forget some of these. I think there are going to be some great ways to not really fear the bear market that's going to be coming up here in 2025. I'll give you the last word, Phil.
Yeah, no, I totally agree. So I think, it's exciting because we have like the finale here, and it's the fun part of the market where you can just, buy the dips, and the dips aren't going to be that shallow. I think what that means in the stock market is like the S&P 500 probably dances between the 20-day moving average and that upper Bollinger Band, which is like a standard deviation or 1.5 standard deviation. I actually think we're going to, and that's what we kind of did as we came out of our most recent leg up before we had that pullback that created this last bull flag that we've exploded out of basically. But up into May, we kind of had that scenario where it was week after week, smaller weekly ranges, but just that grind, that relentless week after week grind. I think that's what we're going to see. And I think we've got a date with, S&P 500 north of 6K. And like I've said earlier, Bitcoin 6 figures. So how exuberant that gets remains to be seen. It could get very silly, but it's going to be very short lived if it gets really silly. Like if we get a real vertical blow off, let's say Bitcoin goes to 170K, I think it's enjoy it while it lasts, because that's probably going to retrace rather quickly, and then we'll navigate the rest of the market into the election and beyond. And that's where I think you're going to need a good skill set, because anybody can make money when it's going up, right? Just buy and hold your breath, and you can get bailed out in bad locations if you buy too high, right? And just wait it out. You're going to get out of that position. But when that's done, you better be very careful on how you're positioned and where you get in at and out of, because it's a very different market. It's very volatile, and bear markets behave much more differently than bull markets. They don't just stair step higher, right? They're very violent in how they behave. So totally different market environment. Best thing you can do is look at some of the 2022 charts and kind of see how that went, but it was not for the faint of heart. So that's what's ahead. Pretty exciting stuff, but we need to be careful as we venture into Q4. And with that, Bob, we'll catch these guys later. See you on the next episode. Thanks for watching. Check out our stuff over at tradegenius.co. We got PPI tomorrow. We'll see where we are at after those numbers come out. Talk to you then.
Trade Genius.